Bloomberg Audio Studios. Podcasts, radio, news.
This is the 26th annual GCC here in Shanghai. We've been covering a lot of them, and we are very pleased to bring in the guest of honor. Not the guest, he's the host. I'm the guest here at the GCC, and that is Sergio Ermotti, UBS Group CEO. Thanks so much for having us here this again. What is your message to the 3,600 or thereabout participants here at the GCC this year? And what's your general outlook for business in China for your bank?
Well, actually, it's also great for me to be back here. Last year was a quite important year for China. I think that we saw a huge interest coming back on the Chinese market. Stock performance was great, and we see it today. I mean, we have almost 3,600 participants. You go through across the board from corporates, institutional clients, family offices, and not coming from also all over the world. We see also more interest from overseas, which is indicating the momentum of the Chinese market. So I think that we believe this is going to continue. The secular trend supporting China in terms of growth in innovation, in technology, in biotech is here to stay, and investors are realizing that.
What kind of deal flow, though, are you starting to see as we are starting to see China get some momentum? You talked about the stock market, the CSI 300 up about 17% last year. So it's gaining some steam, but also outbound deal flow seems to be growing quite a bit, whether it's investing in factories in Europe or in the global south. It seems like capital is not only coming into China, where foreign interest is obviously looking at that rebound, but also the capital is moving abroad.
Yeah, I mean, look, it's a good mix of businesses, but when you look at, for example, the underweight of international investors to China, almost half, from around 2.5% in 2024 to 1.3% or so in 2025. So this is a significant change on a year-on-year basis, and this is the main driver. We continue to see a lot of activity around IPOs, particularly you saw the record IPO issues last year in Hong Kong, which are probably going to stay with us also in 2026. We see a lot of activity across Asia. Inbound and outbound M&A in Japan is up threefold. So in general, I would say that you will continue to see momentum of Chinese investors investing abroad, but also capital coming into the country.
What's going to be your priority onshore for 2026? Last year you got the full 100% securities license. Yeah. What's going to be the priority?
We are working on all of this. We also last year we also made a capital increase in our local entities, and I think this year we are now planning to launch a Panda bond. So I think that we want to continue to foster our presence in China. We have been in China for mainland China for 35 years. We have been in Hong Kong for 60 years. So this is really part of our core business. I mean, if you think about, we are managing in the region more than $1 trillion of assets, 800 plus in wealth management and 215 in asset management. So we want to continue to reinforce that position, but at the same time, our leading position in the investment bank across the board, and where we are a leader in the region and in China, mainland China particularly, and also in asset management through our very successful joint venture with ICBC.
What can you tell us about the arranging of that Panda bond, the size and timing and the likes?
This is still to be determined, but the decision has been taken to issue a Panda bond.
So onshore versus Hong Kong or Greater China, what's going to be the emphasis onshore as far as hiring? I mean, you're very strong in wealth management, obviously, asset management. What's going to be the priority?
Well, look, this year I think that our goal is to continue to working with local universities, hiring young talents. We employ around 1,300 people in China. Half of them are in Shanghai, and the rest is in Beijing, and the rest of in Shenzhen. probably going to add up around 100 people this year in China, and we are, as I said, we are also investing not only in seasoned professionals but also in the young generation of people for the franchise.
So obviously you still have some personnel issues on the cost reductions from the integration with Credit Suisse. That's separate from what you're going to plan to hire across Asia and in China.
Yeah, look, when I look at Asia, in general, the integration is over, is done. So I think that we completed the integration in 2024. Mainly in Asia across the board. The investment bank has been closed and asset management the same. So as I just mentioned, we are hiring both in China, but broadly speaking also in Asia, in Japan, for example. We've been expanding our capabilities and leveraging really the complementarity of Credit Suisse and UBS together, where we not only have a broader footprint in terms of capabilities, but also of geographic footprint.
How would you assess how your businesses in Asia are doing versus other regions, whether it's Europe or the United States?
Asia has been growing very fast in the last years. It's probably the biggest engine of growth in nominal terms, is accounting for around a quarter to 30% on average in the last 5 years of our profits. So as I mentioned, we manage more than $1 trillion of assets out of the $7 trillion we manage globally. So it's a growing, steady growing business, which when you look at the engine of growth is, GDP growth is definitely going to help. 4.5% in China is quite important, but it is a driver for growth in the entire region. We are selectively gaining some market shares in areas where we want to compete. And last but not least, this monetization, this IPO calendar is very important to our wealth management business, because this is really helping us to drive net new money, net new assets into our wealth management franchise.
Well, speaking of that IPO pipeline in Hong Kong, it's been quite strong. A lot of the new economy companies, but there are also concerns of the new economy companies, whether it's Minimax or others, that profitability, just like the AI companies in the United States and Western markets, that the sustainability is not necessarily, it doesn't have a lot of visibility. What's your views on whether we're in a bubble and how long that potentially could still last?
I don't know if we are in a bubble or not, but of course, when you see this kind of multiples and performances, you have to ask yourself, is this a repeat of what we saw in maybe in another time?
2001?
Exactly, the TMT bubble and so on and so forth. I would say that in general, first of all, our advice is very clear. Diversification, no concentration of risk around this sector. The technology and is here to stay.
Yeah.
But we should not really mix the two issues. From an investor standpoint of view, it's very important to diversify, not to get into a trap of trying to pick up the winner or the loser. But the truth of the matter is that the first wave was probably around the technology sector. Now we're going to see how embracing and implementing AI can help other parts of the economy become more vibrant and more efficient, and that's probably going to be also the next side of the story.
You also you can't discount the fact that most of the deal flows right now are in China. The interest is in these new economy companies.
Yeah.
So could you kind of quantify the type of deal flows, whether it's underwriting or other types of businesses or services from your bank that are tied directly to what has been a priority of central government policymakers here?
Well, look,
AI.
but this is something that is not really new.
Yeah.
The priorities for the central government around innovation, being technology or pharma, biotech, and so on, has been there for a while. So, from our standpoint of view, what we are helping is local clients, but also foreign clients to really select the winners. I think it's quite impressive how the Chinese companies are able not only to be a fast followers, but in some cases setting new standards for incumbents in the U.S. So from my standpoint of view, this is a big story to stay with us, where we're going to see probably Chinese companies, creating new frontiers of innovation rather than being a follower.
You've mentioned Japan twice already in the last 6 or 7 minutes. What do you like about the Japanese story right now? Obviously, the market's doing really well. There are some pro-growth policies from Takeichi-san, the new prime minister. What in particular do you like about Japan?
Well, I have to say, before year-end, I was in Japan, and after 30 years of, I felt for the first time a renewed sense of optimism across the board, and corporates, institutional investor, governments, regulatory bodies looking in a much more positive ways about the future. So I think Japan is the third largest wealth management market in the world in terms of savings. And it's quite clear to me that now that rates are coming up, and there is a new paradigm that is there to stay with us, and I do believe that also there you will see Japanese corporates probably looking to deploy more assets outside Japan, but also a renewed interest from foreign investors into Japan.
Where specifically would you like to grow in Japan, and what kind of hiring? You were talking about maybe 100 new positions here in China. What about Japan?
Well, across the board in our core businesses, I mean, outside Switzerland, I mean, de facto, the three core activities, in wealth management, we have a very successful joint venture with Sumitomo Mitsui Trust Bank, and that is growing, and we want to foster more in the investment bank, of course, in the investment banking, in ECM and M&A, reinforcing our presence in equities and in research, where we are a leader generally in Asia, and last but not least, in the asset management business.
Let's talk about the overall integration with Credit Suisse. You mentioned that in this part of the world and in China, that integration pretty much was completed last year. And you've also said to us, I think in September, that the overall integration will be completed by the end of this current calendar first quarter. What are the biggest hurdles to overcome right now? IT integration is going to be a big one, but also there's going to be some personnel issues that you have to resolve as you go through that cost cutting.
Yeah, so what we're going to do by the end of this first quarter, we're going to migrate the balance of around 15% of the clients in Switzerland into the UBS platform. At that point in time, all clients globally will be on a UBS system, right, on a UBS platform. Then we're going to start to shut down IT centers, data centers, and de facto in Switzerland we are still maintaining and running two separate IT systems. So shutting down that one will create the synergies, real estate footprint, and to some extent, unfortunately, also some personnel reduction that will continue to stay within what we announced in terms of proactive redundancy. We believe we're going to manage that below 3,000 redundancies between now and the early part of 2027.
And where do we stand? Do you have any kind of update right now what the bank's perspective is on, of course, the too big to fail regulation and some of the proposals from the Swiss government as far as capital requirements?
Well, this is really an important steps together with finishing the integration. I think that I just mentioned, the process of completing the integration and finalizing this very big work, because of course it is also painful, because as I mentioned, we need to go through redundancies. But what we want to set is the scene for growth, to be able to to hire again and growth. And in that sense, in order to be able to grow, we need a competitive regulatory framework.
Right.
And what we fully understand the necessity of taking the lessons learned from what happened at Credit Suisse. But we believe that the current proposals are not really reflecting what happened at Credit Suisse and are going too far. and therefore we are contributing in the debate with our views on the matter. But this is now a political process. We hope we're going to get more clarity by the second half of the year.
Second half of the year, are there compromises that you would potentially accept? And that conditions of doing business, is it a hindrance, obviously, to be still domiciled in Switzerland?
Oh, look, first of all, there is a compromise is usually between two people, negotiating something. We are not in a negotiation. It's a political process, and therefore we need to see what's coming out. As I said, our role right now is to make sure, on behalf of our shareholders, our employees, our clients, and in general to the public, that we contribute our views on the matter. But we are a Swiss bank. We are very proud to be a Swiss bank. We believe that is a differentiating factor. We believe this is good for Switzerland, and we want to continue to operate as a Swiss bank going forward.
So it's not necessarily a compromise, because as you said, that would be a negotiation, right? But are you confident that they will come up and there will be a resolution that will be acceptable to UBS?
I cannot be confident about that. I think that I'm pleased to see that there is a political interest to go deeper and fully understand the details of this. It's very important to understand the details of what's going on. So such an important decision cannot be taken out of emotions or by people trying to drive the agenda by fear.
What are your opportunities do you see in the United States? Obviously, your chairman has talked to Scott Besson, and those massive market rumors that was possibly about discussing moving to the United States. But we also know that Mr. Kelleher wants to boost wealth management in the United States. What are the opportunities there?
Well, first of all, I have to say that we are in regular dialogue with many key stakeholders around the world in government's regulatory framework regularly. So there is nothing exceptional when we speak with one or the other officials. But of course, the U.S., together with this region and China, are likely to continue to be two engines of growth. It's very important for us to continue to be competitive and present in the U.S., like we want to continue to be strong in Asia and in our home country, Switzerland.
Sergio Ermotti, thanks so much for your time and having us here at the GCC 2026.